Good morning, YouTube family. It's Stocks with Josh, or as you might have thought over the last couple weeks, Stocks with Crypto Josh, as we were deep diving into crypto, making sure that your guys' money was safe on the right exchanges and that you were in cryptos that would survive the bear winter and be part of the next bull cycle. Well, today we're going to go back to stocks and one of my favorite stocks, Verb Technologies. Man, I could smell the rocket fumes on Verb yesterday. It was up 9% and hit 66 cents. Verb has been steadily making higher local lows and higher local highs. I'm going to jump into the charts today and give you an easy visual understanding of where the price action is leading us and where the stock may be heading. As you guys know, I largely view myself as a technical trader, which means that after I look at the fundamentals of the stock, the leadership, and the product, I then focus largely on the charts and what they're saying. I believe the charts do not lie, and price action, my friends, is the truth. Before we begin, if you've been following me and you enjoy the page, then please hit that like and say hi in the comment section. If you're new to the page, I hope I earn your like and your subscribe by the end of this video. Remember that anything I say is not a suggestion for you to buy, sell, or hold a stock. And there are people using my picture in the comment section, impersonating me and asking you to reach out to them on WhatsApp, Telegram, and Instagram. It's not me. Okay, so let's recap. I started a small account challenge where the goal was to set up a strategic trade where we would DCA into that trade correctly during the bear market. And yes, you can absolutely DCA into a position incorrectly. And that is one of the biggest mistakes that beginning traders make. There's an excellent quote by Edwin Lefebvre in a book, I believe, called Wall Street Stories. And it goes like this: the average man goes to Wall Street after easy money. He does not lose his money when he sells, he loses it when he buys. So that's what I want to look at with you guys, is smart buying. Let's look at these charts, okay? Let's go over what we're looking at. We're looking at a one-day chart, which means that every one of these candles represents a single day. In addition to that, we have overlaid the indicator, the SMA moving averages, 10, 20, 50, 100. Okay, and that's really one of the main things that we're looking at, because when something goes in a long-term downward trend, it will definitely put the 10-day moving average at the bottom, which is what we see with Verb right now. And when it begins to reverse, this 10-day moving average begins to slowly cross over all the other moving averages. So we had this wonderful, and you can tell when we go back in time that most of the entire time when it was coming down, it was at the very bottom. Every once in a while, when it reversed the 20, it did lead to a really nice spike up in price. That's where we saw it at this stage go from $1.05 all the way up to $1.69, which is a pretty good move, right? And that's what we've been waiting for. And so right now we have seen the 10-day cross over the 20, which gave us a nice initial push up in price. But after that, we wanted to make sure that this downward trend was officially coming to an end. We didn't want to see it hit a new low and then make another new low. So back here where it hit the low of 30 cents, we then saw it move up. And it came back and it did not break below 35 cents, okay? At that point, the 10-day moving average then moved back over the 20, giving us this nice push up. I want to explain some of these areas of support and resistance. So this area, which had previously been support when Verb was coming down, when it got broken through, it's now acting as resistance, right? And another area of support that we've come up against is back over here. This had once been support when the stock was coming down, and now as it's coming over here, it's been acting as resistance, okay? So today it briefly broke over that, but it did close the day beneath it. Now, when it came back this last time, it found support bouncing off the 20-day moving average. And that's specifically what we're going to be looking for moving forward. We're going to be looking for this to find support on the 20 or the 50-day moving average. And each time that we bounce off of those moving averages, it's going to give us even a stronger move to the upside. Right here, we bounced off of the 20-day and we got this nice little move up. Now, we can continue up in the next couple days. My target, as I gave you guys in recent days, was between 75 and 79 cents as a local target of movement upwards. Now, we could come back from this recent move and we could come back and test the 50-day moving average and then go up from there. If we're in a very bullish trend and this shoots up tomorrow, one of the very important things that I'm going to be looking for, here we jumped out of the stock. 1 second, guys. One of the very important things that I talk with you guys all about that's super critical to identify when trading is these candles, okay? Let's look at a couple of them. Here's the candle with a very tall wick. When we had that strong price move up, as soon as we got that candle with that tall wick, that's what let us know that we were going to move back down. We came over here and we didn't make a really big high, but we got that tall wick candle, which told us that we were going lower. Right over here, we got again that tall wick candle, which told us that we were going lower. Now today, we don't have that tall wick candle, which means that we still have the opportunity for a move upwards. I want to kind of go over with you guys that if you bought your crypto, if you bought this stock, I apologize, if you bought this stock in the higher price range of the 50 or 60 cents, you're going to want to wait to the 98 cents. But if you bought it in the lower range of the 30, 40 cent area, then you absolutely could take profits between the 75 and 80. You could also let it sit. I believe we're in an upward trend, but if we catch the peaks of these tops and we rebuy back in at the bottom, we're going to be able to really double our money and just really increase our what we're making here and move much faster in this small account challenge. I want to review with you guys the correct way to buy or DCA in a bear trend. Step 1, you want to buy below the mean price. By definition, that's the average price over a given number of data points, sort of like the mean or the moving averages we looked at. These data points could be a range of long-standing support or that moving average. What is the current mean on Verb? We call that as the pullback to the 50 SMA. Step 2, we want to buy in increments in increasing percentages and order size. So we would divide up the amount you want to ultimately own in a company. Let's say it's like $1,000. Divide that up into more than one purchase, like $100, then $200, then $300, then $400. Those 4 purchases total $1,000. And then you need to consider when to make those purchases. Like we did with Verb, we increased our position at a decreasing percentage going down. What does this result in? Well, a good average price. I want to give you 4 philosophical trade disciplines that I've been thinking about over the last couple of days. Number 1, you need the discipline to save your money when there are no great trading opportunities. Larry and I have mentioned that many times as cashing up. But a lot of people are always anxious to put their money to work. The market is always moving quickly. And it reminds me of that local park ride. I think it's called a roundabout, maybe even a merry-go-round. When we used to go to the park as a kid, there would be that merry-go-round or roundabout where, maybe a father would be spinning it and kids would be inside. And I think the goal of it was to basically survive getting spun around. And the faster they spun you, the more likely you'd get tossed off. And then one of the kids would start crying and nobody would spin it anymore. But, I was thinking about this as it relates to the idea of investing, right? There are people who come into the market and they are essentially walking up to a spinning roundabout. And they're thinking to themselves, I'm just going to try to, when it slows down, I'm going to try to jump on it and, see if I can, get in there and have fun like all the other kids, i.e. make money. And when really what they need to do is they just need to wait, get their cash, get cashed up, wait for it to stop, and then they can get on board at the right time in the right place, and they can position themselves so that when things begin to move, that they're not going to, come flying off, right? And that's why you need the discipline number 2, which is to stay connected for potential opportunities. The way to do that, in my view, is to invest weekly. Whatever minimum you could afford. I often reference 25 bucks. That's how you stay at the park, i.e. the market, right? So, if you are paying attention to what's going on and you are weekly putting in money into the market, you're gonna be positioned so that when the right opportunity arises, you can make a move. A lot of people, they kind of take that approach I was mentioning a minute ago, where they try to jump onto a situation they don't fully understand. They haven't timed it correctly. It wrecks them. They get hurt. They walk away, and they're totally disconnected from the market, right? If you stay connected through weekly investments and you continue to save up cash, then it leads you to discipline number 3, which is to be able to act instantaneously when a good opportunity occurs. For example, right now stocks are 30 to 70%, many of them below their mean, in the price of despair. And finally, the most important discipline is number 4. It's to follow your trade plans. So far on this YouTube channel, I've been laying out some simple trade plans with stock and crypto. And that's what the Verb Small Account Challenge has been about. It's about being patient. Once your trade is fully set up, then we're going to move quickly in and out of Verb at a number of profitable gains. So if you've not been following along, you can start right now by clicking on the link in the description of this video for moomoo. You can deposit $100 and it'll give you, and I'll give you the buy and sell signals. Moomoo is offering up to $20,000 in 10 free stocks based on your deposits, and if you're lucky enough to win a draw. You'll have to spin for it, and then it's done under the Me tab and the Promotions tab. That's where you spin and potentially win those higher valued shares. There's also a link to Webull, and I'm doing Larry's $1 Million Cup of Coffee challenge, where we're buying solid blue chip stocks on red days because they offer fractional shares over on Webull, where you can get companies like Apple, Tesla, and Google. That's the part of a base of long-term investing. To make generational wealth, you have to hold good stocks for a generation. Not all of your trades can afford to be high risk. If you've learned something in this video, then invest in that like and the subscribe button. As always, thank you for letting me be part of your financial journey, and I look forward to seeing you in the next video.